Hey everybody. So in this video, what we're going to do is run through a litany of stocks that moved today. There's a lot to go over and there's a lot to cover. So I'm going to go over it as fast as I can and try to get as many names in as I can. But the one thing that I would suggest, as always, subscribe to this channel, turn on the notifications. What we go over here is extremely timely, actionable, and educational. I try to get through all the fluff and like chest pounding and show what it truly takes to be successful in trading. So if that's something that you're interested in, settle in and we're going to get right into it. And everything's in alphabetical order, and there's usually a gentleman or two that's kind enough to put in the timestamps so you can actually click through the names after you see them all listed in the description. It's a great way to watch the video later the next day as well, so that you can just kind of go through it and see, oh, I was interested in CELH. What did he say? And then go from there. So thank you to the people that do that. AHT, we're just going to jump right in. Look, you've got a little wedge right here, and you're forming another one. But if you break this, you can come down. Now, I just want to go through something. Just because you come down to this level, or you come down here, does not mean this move is over. And I think it's really important to understand the difference between a stock that spikes up and then comes down. This is building a base and has built a base and now has broken out of said base, right? So there is a big difference between this and something that just decided to spike up on a Tuesday. And it's building that way. See how you spiked up on it on whatever day it was. We're going to say it's a Tuesday because we're going to stick with that. And then came back down, tried to rally through that. And then what happened? Wham, whack-a-mole, right? So that's not what happened here. Okay, we built and we slowly grind up, and then we broke out, and then we got extended, and then we came down. And I guarantee you that if you look at something as simplistic as Bollinger Bands, right, they're going to show you that, right? They're going to show you how tight it was in here, and then they're going to show you how you rode the upper channel. And then what happens when you break into the upper channel? You come down. Okay. Now, knowing this, and if you ever watch that Bollinger Band video, you'll know, and I'll link the Bollinger Band video at the end of this, what you'll notice about moves like this is that you can revert down to this 4. You can revert to the 20-day, which is roughly the 21-day. If you do that and you revert, it doesn't mean the move's over. It just means that you have an issue, right? It just means that you're going to have to ride from 6 to 4. It doesn't mean that it's not going to base and build up and run again, but I don't trade like that. I don't want to drop down that way. So what I'm suggesting is that if you break this low right here, right, you might want to get out of it unless you're willing to get to that level, because that can happen. So this is not something that I personally am chasing right now until it decides what it wants to do. And right now it looks to me like with this bearish engulfing bar here, it's looking like it's going to break this. So just keep that in mind. ATVI. I really like this stock. I like this idea a lot. I understand why people are looking at it right now. I mean, it's just been a monster mover, but I would argue that you don't really want to watch this one right now. You really want to see this break through 100 first. You see, I see this 98.70 level, everyone's probably watching, right? And you broke through it today and you're all excited and you're seeing this. But this long red bar over here, that's what's in charge. Okay, that's been in charge of this entire move. Boom, couldn't get through all that. Couldn't get through it here either, right? So I'm not saying that it doesn't break through, but what you want to see is you want to see this bar fail and lose its power. That's what we're looking for. And that just happens to coincide with the low of this breakout. So, and it also just happens to coincide with a triple digit number, and those numbers, as we discussed today, in our little room, that they do tend to have a psychological value associated with them. And that is a very valid statement that was made today. They do have a psychological value, and for whatever reason, this is being rejected by it. So just keep that in mind. So AYX, and let's go through here. AYX, I mean, this thing will give you a heart attack. So let's just run through it. I mean, you have a gap down here, right? So this gap down, when you do this, okay, this is an island reversal. And then you gap up, and then usually these go and fill the gap. This one chose not to do that, okay? Then you have another one here. We have like another island, and then it breaks down, but it only goes down for 2 days. Then you do it again here, and this one goes up for 2 weeks, and then you come in one day and it's back down to here. Okay, so I mean, you have to realize what you're playing with here when you're buying this one. Stocks like this make me I want to avoid stocks like this because the gap risk is just too great. I mean, they're 20, 30, 40 point swings on a $150 stock, right? I mean, you came in on a Thursday, you're all happy, right? On February, and then wham, you come in and you're down 25 points. I mean, it's not like it's happened once. It's happened like 3 times in a year. So it's not something that's a ringing endorsement for me that I want to be involved with. But I would say this about it. You see these wide bars? Look how they've changed and how they're consolidating to these smaller bars. Like whoever's been in this, they've just had enough and they're all out of it now. And now you've broken through. But before you can say that you actually have a bottom here, you need to get through 89.36. So before I buy AYX or would be interested in it, I have to get through this 89.36 level. BBW does what BBW does. Build a bear. Okay, they give you a wick. And now we have another one. Okay, so somebody up here is a seller. And there's a reason I have you marked at 1833, even though we closed at 1845 today. We've never gotten above this close. We did today, but I did it on a long-legged doji, right? We have price rejection here for those that watch that candlestick video. It's not really what you want to see. I mean, it's actually worse because you're doing this with it, right? I mean, it's not perfect, but you're actually forming a rising wedge with wicks. So it's not really where you want to be. Now, you can see that, and as we know, we can clone these. There we go. And when you clone them, right, they kind of lie in there, but not really. So we try to lay it down a little bit, see if it fits somewhere better. Fits a little better there, doesn't it? So we'll keep it there. Okay, and that encompasses more of the move anyway. I just am very concerned when I start seeing stuff like this. It's that you have a seller up there, right? And I just had an enormous move. So does that mean that a secondary is coming, that somebody's trying to get out and they can't? I don't know, but I do know that I would be very concerned about those wicks. They are somewhat concerning to me. And until that stuff straightens itself out, to me, I would avoid it. So, and I know people like the name and I get it. This I like, this BILI. I like how tight this is getting right in here. I see this break. That's what people were probably looking at today and getting excited. But we have the wick, and that wick tells us what? That we have rejection right along that line, even though we broke this downtrend. So that doesn't get me too excited. I would wait for us to get through this 117.88 level. And then, because I don't want to get to 123. Technically, you should wait till 123, but I don't really want to wait 8 points. And I want to see volume, on that break. I don't have volume here. I have volume here. That, right? Like, that's a buy. Okay. I mean, look at this on relative volume. It's probably through the roof, right? Yeah. I mean, that's a buy. This, not so much, right? I want volume. I want everybody to own what I have. And if I don't have that, on to the next one. So I understand why you're looking at this. I get it. It's just not ready for prime time until you see volume like that. But it looks beautiful. And, perhaps somebody wants to be in that for a different reason. Maybe their fundamental reason. But you have to wait for that 118 level. So Blink, look, we just have to go through this so people understand this. Okay, this is stage 1, stage 2, stage 3, stage 4, stage 1. Okay, you're in a stage 1. In other words, I'm building a base. So when I'm building a base, and the reason I did that is so you can kind of understand it in your head, okay? Let's get rid of these indicators. So when I'm building a base, what am I going to do? If I'm building a base, I'm going to build a base. I'm not going to just break out and start running. And that's exactly what's happening here. There's nothing wrong with this action. I've come back down here. I tested it. I held. I broke these little wedges and I ran back up. But that doesn't mean that I'm going to explode to the upside. Okay. We've had that time, and you need to look at these indicators because they're telling you a story, right? They're telling you a story that all this volume has gone away. And until that volume comes back, we're not going to move like this. It's just not going to happen. You're not going to have enough of an impetus and enough desire. So you're going to have to understand that these moves are going to be more muted, and sometimes they're going to break and they're not going to go. And that's okay. You can still make money off of them. But you have to understand that the game's changed a little bit. And the game's gotten, frankly, to me, the game's gotten easier because now I don't have to worry about breakaway rallies. I get to build positions, right? I don't have to worry about, oh, I have to stay in this because it's going to go up 100% in 4 days and I'm going to look like a guru. No, wait a minute. I'm forming a wedge here. Now I broke out of that wedge. And so I can look at these a little tighter and go, well, all I have to do is use that low as a stop. If I really want to be in this, if I truly want to be in this trade and stay in it, right? All I have to do is use this low as a stop and this wick as my breakout. And I better see some decent volume on it to be in it. And this can go. This can head back to $58. I don't think these moves are over by a long shot. I think these are going to be around for a while. You know, EV is not going away. It's only going to get stronger. And every single time that Ford comes out with a new truck or GM comes out with something or Hyundai now just is going to create the demand for something like this because they're not going to want to be in that industry. They have enough issues to deal with. So that presents opportunity for companies like Blink and charging stations and some of those other names. So just keep that in mind. So this is just nasty stuff on CAT, just absolutely nasty. And what we're seeing here is exactly what you don't want to see. You're just falling through a cliff. You're down through the 21 to 50 and people are just puking it out. Now, the fact that people are puking this out the way that they are leads me to believe that you're probably at a short-term bottom and that you might flip. So, and there's a couple other things that make me think that, and just you might want to just pay attention to this because it is somewhat helpful. See this long red bar, and you see how it's just like solid. Like, let's get rid of these indicators. We know how nasty they are. So you see this long red bar. See where we open. See where we close. Like there's no wick. There's no wiggle room on how nasty that was. It was just nasty. We can't go home that night and convince ourselves that, oh, it's going to be better tomorrow. Like it's just bad. So we have to look at that and go, okay, what are we going to do about it? So we come in the next day and we see another nasty red bar. You can't go home again and feel good. You closed at the low, opened at the high. We did try to rally, but Now today we come out and go, okay, well, maybe there's a glimmer of hope. I've got a doji. Well, what could form? What could this doji form? Well, that usually might mean that we're at a bottom. Well, if we know candlestick patterns, we know this is 2/3 of a morning star. Maybe tomorrow we get a higher high. Where would that higher high have to be? 221.88. Okay, well, maybe I can go home and sleep a little bit better knowing that the volume, if the relative volume is big, well, the relative volume is 2.5 times. Okay, so that means that I have a bunch of people that are just saying, I've had enough, get me out, which that means I could be setting up for a bounce. Is there something else that I could use to determine if we could bounce? Well, let's just throw a Bollinger Band in and take a look at it. Okay, so here's your trade. I'm out of the band. Getting through this and through the band roughly is 222. We all know this, that if I revert back into the band once I'm out, the probability of going to the 20-day, or I use a 21, doesn't really matter, it's 6 1/2, gets me to 235. So I think that there's a short-term trade here for somebody that's interested in buying these. And I would argue that, without even looking at the trade, I haven't even looked at it today, that John Deere probably looks very, very similar to this, right? Let's just take a look. Right. I mean, so you're basically looking at a very, very similar trade. I would argue that the one that we're looking at looks a lot better. And let's get rid of that caps locks off. But I would argue that this one looks a lot better. The way that it's out, the wick, the just absolute puking of volume. So keep that on your radar. So CCIV, let's run through this very quickly. So we got in this and our stop was 25. We're through it. We should be out of the trade. And if we want to be back in it, we should be looking into it for another one. But, this happens. And even when Workhorse, which I talked about today and recommended today that people take a look at, this happens. With what happened with Ride and this news is exactly the issues that you're going to see with these SPACs. You're just going to get unscrupulous people. He got everybody excited to go look at this. Come look at our new facility. Oh, by the way, we don't have enough money to produce cars, but we've been writing ourselves massive checks to pay ourselves. But that's okay. I didn't. And then he went on TV talking about, I don't think people really believed that I had orders. So the bizarre stuff starts. And when that happens, people are going to start going, well, wait a minute. What are these other companies that are trading at pre-revenue? Well, here's one. Are they in production? No, they're talking about getting in production. Oh, well, that could be the next one, right? So that's where people's minds go. And so when that starts happening, whether or not it's factual or not, does not matter. It's just people perceive risk. So now you have institutions going through their books going, well, what's the next one that's going to blow up? Well, why don't we start shorting some of these, right? And so they start putting short positions on. It doesn't matter if they're right or not. It's just how the thought process that goes on. So that's why you're starting to see the weight on this. I actually thought that we would see the exact opposite with something like this and see like, oh, we just got rid of a competitor. This is going to rally on it. That's not what transpired. And this was looking great at 16 today when we got above this, when we got above here. We opened, got above that. I'm like, okay, we're going to break. And this is drawing nasty now, but I'm like, we're going to get above this. We're going to break this wick, right? And we're going to get above that. And we triggered. It played out perfectly, right? It triggered. That's why we bought it. And then what happened? That was it. And then it just sold down all day. And that's because people were looking at this at the end of the day going, you know what? I don't want to be in these. If I could be in the next one. They're not really producing anything. Get me out and we'll just see what happens. And that's what transpired with them. So we're stopped out. I could be back in this tomorrow if I flip this and try to head towards this 27.88. So just keep that in mind. It doesn't mean that the trade's over. It's just over for now. CELH is one that I've been talking about at like 62.50 in the newsletter. I like the idea a lot. I think it's very important to understand candlesticks, and we're going to really drill into this one, and everyone can see how it's riding the 21-day. I don't really have to talk about that, but let's get into this because these three bars are telling a story, and we're going to learn that story now. So here's the wick, right? We open, everyone's all excited. They priced it at 62.5. Well, if I can buy stock that's oversubscribed cheaper than where institutions can buy it, I want to buy it. So this offering was oversubscribed, meaning they had more than enough people that wanted to get into it. Okay. And I broke down, gave me my range. All right. After testing this little range right here, okay, so then put the trade on. But look what's happening. So wicks are price rejection. So here's price rejection going on, right? And what's happening to us? Well, I filled a little bit of that price rejection on Friday, right? And then I'm rejecting selling. So I've rejected selling in this level, which I did not the previous day. So that would lead me to believe that weak hands, or as the kids call it, paper hands, is over now, right? Okay. Then you come in today. What happens? We open here. We run to this level. And then we push. And that's exactly what you want to see. So that's exactly what we want to see. Hold on 1 second here. Let me just see something. I'm just getting a notification. I just want to check something out real quickly. So let's see. Okay. Sorry about that. So I just have alerts going off. The market's still open, even though it's, it's closed, but we know what's going on. Then I got some alerts there, but it looks like we're good. Okay. So you see how we're going here? Apologize for that. And we're running up. So we filled that gap. So the spot that we didn't fill on Friday, what did we do today? We filled. I mean, that's telling you a story, right? We have buyers. Okay. We might not have a lot of selling and we might not have a lot of buying, but we have buyers. And that's telling you a story. So if you flip this 64, what was the high of this bar? 64.84. Bet you this one's a little higher. 64.94. Okay, get me over 65. Get me through that 21-day, and we're going to peg to 70. And it's not going to be a grind. It's going to be pretty fast because people are going to go, oh, I missed it. That's what I think. You might get stopped a little bit here, but I doubt it. So let's just keep on rolling. So Crowd, I understand why people are looking at the name. The earnings when they came out, we'll just look at that real quickly, right? This is when the earnings came out. Then we sold back down, tested the 21-day, had a reversal pattern here, then a little wick, broke through 225, right? First time failed, second time's a charm. Keep that pattern in mind. Sometimes that happens. And you run right to the top of this range, and then what happened? We just kind of like bumping. See how these bars are getting smaller? Pay attention to that. That's telling you that the buying's drying up as you're getting to this resistance level and this resistance level. See how the bars are getting smaller? It's telling you that it's drying up as you're getting closer to the resistance level. So it could build a flag under this and then push and get us to that 251. But there's stocks that are already breaking out of those highs. And Net is one of them. And we're going to review Net tonight. I understand why people are interested in Dash, DASH, but let's just go through this. I have very little volume, but I am walking up the volume. I'm finally over 155, but I've been here before, so I'm not really ready to jump in this. And I understand why people are interested, but you can play this very cleanly. I mean, you can just use the low of the day as a stop. If I get below 155.50, I'm going to go back to the 21-day probably. So understand the trade and understand that you have 167.23 above you. DMTK. I like this name. I keep looking for a spot to buy it, but I just simply don't have it yet. So we're just going to have to sit, watch, and wait until that happens. But we're just not there yet. 45.50 is really the level that I'm looking at, and I want to get above it. We are riding the 50-day, and we're respecting it. So let's just do this EBIX. So I want to just do this one very, very quickly, EBIX. So this is exactly what you don't want to see. This is the exact opposite of a good day. So I open here and it looks like I'm going to run, and I get right into this gap and I open at the high and close at the low. It doesn't get nastier than that. And all my volume encompassed the breakout volume. So if you're in this, just be aware of that. That's a pretty much a reversal pattern. And if you take out a lower low, you're probably going to cut through these levels pretty quickly. Just keep that in mind. So that's why I have this. It's not actionable. Ericsson, I wanted to go over. I like this, but look how you're riding this 21-day down. And I understand why you're looking at this, right? You see the wedge. Like if you clean this up, here's your wedge, you're breaking that, you're holding the support level. But really, until I get above that 21-day in the symbols ERIC, I don't want to be in this. You know, I need to get above that 21-day. Even the cross here, look at the cross. Look how you're responding to that cross area. So just watch and wait. So Etsy, we keep talking about this space. And we keep looking at this name over and over again like it's going to get better in a day. This will not get better in a day unless some news or event is coming out. We're out to August or September. Yeah, you know, you can just see, like, I understand the space. I understand why you want to be in the space, but I don't. This is not the name to be in the space with. The name to be in the space with that's breaking out, that looked at today, that nobody even asked me about, was Shop. That's breaking out today. And you know, there's a couple people that email me or message me and talk to me about the name, and we were going through it, and that's breaking out. Like, look at the difference. You're riding the 200-day. This is rolling. We're getting excited because this is flat and it's getting tighter and tighter. I have wick after wick of rejection, and it is getting tighter. And I get it. If I break this 171 level and I can pop over this, I can clear this and I can make 10 points. Here, I'm going to save you a lot of time and ag. Okay. This is going to break out. Okay. It's setting up. It's not there yet. And when it does, it's going to make the move on Etsy look like a joke, right? This is setting up like Tesla set up before that big move. And I know that this is a massive company, but when you see a pattern like this, you need to pay attention. So I will get into this one probably tomorrow or the next day, and you'll probably see this in the newsletter. But we're setting up. We're setting up for a big move. But I would focus your time on Shop versus hoping that this turns around. If you're in this, I don't know what you're waiting for. I don't know what you see that would make you stay in this, or what you're hoping is going to happen. So I would be out of this until it figures out what it wants to do. I just think there's too much risk. When I'm below the 200 like this, it means that people want out of the stock. So Fitch, I get it, FTCH, but where do we go from here? We have to break through 51.86. What happened when we got to 51.86 today? Wick, so price rejection, we rejected. Now, what's very interesting to me, and what I would pay attention to is see this hook on the 21. That's interesting. That's not going to go away. Now, I could still come down to 45 again, and my hook doesn't go away, right? Keep that in mind. But I don't think this is ready for prime time until I get through that 51.86 level. I have to get through that, and then we can focus on it. But we're just not there right now. FTCI, the reason I wanted to do this one was it's new. It's just out. But look at these levels. I was prepping a little bit on this one earlier, and look at these levels: 1161, 1173. They're walking me up. See how they're walking me up here? See how I formed this little wedge, and they're walking me up? And then what happened with that wedge? Look at that volume that came in on that wedge. It's perfect. It really is. And you don't have a lot to worry about here. So you could see this, like if I break a lower low, then you just blow it out. But I think that this could continue to walk itself up. I don't think this is going to be a huge mover, but now I'm above the big red candle, right? That red candle's been in charge for months, and it's not in charge anymore. You know, that changed. And when did it change? I mean, here, take a look. You can just see when did that change? When did that not become in charge anymore? Today, and on that volume. So whoever was here, they've cleaned up, and this can go and have a decent move. So I understand why you're in it, and I would use or why you're looking at it for the gentleman that asked about it, and I would look at 11 3/4 as my move. So FUBU, I like the stock. I mean, we are in this from 26 1/4. And it's just basing. You know, again, you're in a pattern. You know, 1, 2, 3, right? 4. So, and now we're going to build a base. And you have to understand that, like, I'd rather trade in these types of markets than runaway markets because they're easier to make money in and they're easier to pick your stops. I mean, this is very clear that when I got down to this level and everyone's panicking because they think they're going to go through this, that they don't understand what stage they're in. Right? So you have to understand that. You have to understand where you're at in relative to the stages of the stock. So just keep that in mind. It's pretty clear that you're not in a run or breakaway market, right? So if I'm not in the breakaway market, that means I'm not going to collapse like this. So keep that in mind. It means I can come down, but that lets me be orderly with my stocks and be in charge, right? Like you're always in charge. You just set the levels. But I like this. I think it's building. I would not add to it in the middle of this. Times to add to it is when it tests this level, this 2688 level right in here. There we are. That's when the touch it. And then until we get through 3144, there's really no reason in the middle to play with this. So FUBU, I just don't get this. Everyone's obsessed with this one, and I get it. It had the huge move, so it's going to have the huge move again. Look at the volume. Volume tells you a story. See this volume? See how it's down, right? Why do I want to be in the name that's getting less volume? I have an idea. We've been talking about this one since 36, and I don't know why it's doing that. Let me click that over and click this here. There we go. So look at the volume and how the volume's accelerating on this one. Right? Look at the volume and how it's accelerating. Which one do you want to be in? The one that's breaking its upper channel, it's about to go parabolic. And you can trade this. You just have to use 15-minute and hourly charts, right? And find positions and get in there. So, I mean, even this one, I don't know why it keeps doing that with this symbol tonight. It's interesting. Won't let me go through that symbol for whatever reason. Okay. So, but even if you look at that, if you go look at Tiger, you'll see the same thing. You'll see more volume coming in. So just keep that in mind. And let's take a look and let's just keep going through this. And let's just talk about this one. If you really want to buy this, you have to wait for it to break this level. And I would argue that you need to see major volume. Like just look at this relative volume here. Right? You just don't have volume. So stay away. I'm not going to be chasing this. I understand what you're looking at. You need this level to break in order for it to run. Essentially, you need a higher high tomorrow. And you may get it. But I just think there's better ideas out there. Gray, look, I'm not going to spend a lot of time on this one. It broke these levels that we talked about. There's not really much to say except that you're probably going lower. right? You're probably going to that, you're going to test that 50-day. You can really not give me a reason why you're not going to, except that you should hold $5 because those numbers do hold usually. But if it doesn't, you're going lower. And if you want to stay in this longer term, that's fine, but just understand it can go lower. HOFV. I just want to go through this one because I do love these NFT names, and I think that NFTs are going to be around a long time, even though Playboy's acting awful. And I do find it interesting that people didn't ask about Playboy today, which means that they've had enough, which means that it's probably getting close to, a bounce when they don't even want to discuss it anymore when they've had enough. But this 443 level, see how you're sitting right on it and you can't break it? Like you're not breaking down through it anymore. Okay, see how you've broken down and then rallied? I would like to have seen an undercut here for a double bottom, but we didn't have that. So beggars can't be choosers. These wicks mean that I have selling going on. I like this. I don't think it's ready to jump in because the volume's anemic. But if I start seeing volume spikes again, I would definitely pay attention to this because this is setting up and it is getting tighter in here. So something may happen with it. So Manhattan Associates, MANH. So you can see what's going on here, right? I like this a lot. And I'm going to point out what I really like about it. So the first time we didn't go, right? So triple tops are extremely rare and very, very rare. It's like watching them. You just don't see them, right? You break. And here's this huge cup, right? And then you have a smaller cup. And now what happens? It's getting ready to go. But look at this too. Look how they're walking up the volume the whole time, right? And yeah, I do look at volume that close. But it's important to understand that. Now, if you overlay that with something like this and just see what's going on to get a better photo of it, this is setting up. I mean, look how it's respecting that 21 week. Breaking through this could really push this up pretty substantially. So this would definitely, I see what you see in this one, and I would argue that this should be on everyone's radar, getting through 146.50 on huge volume. And understand you're going to have a volatile week. Right. I mean, with the Fed coming out in the news. And so honor your stops. I mean, I can't stress that enough. So this was one that I recommended today in the newsletter, the 95.77 break 96, down 40 cents, 30 cents. I'm not really worried about it. My concern was that this was finally going to break after like an 8 or 9 month base, essentially, is where the base started back here. Right. And then I'm going to break out. And because I understand that the first time that we usually don't go. But I don't mind losing $1 or $2 because I don't want to be the one that's the time that I don't buy it and it does break out. So I'll pay the stock odds a little money and move on if that happens. But it might not happen. So let's just watch this and see where it goes from here. I do like the volume. I do like how it came in. I just think it's sold down because Tuesday, Wednesday, Thursday, you're going to have uncertainty with the hedge fund managers talking about the inflation trade, what's going on. It's why you see the XLF week, and you saw Nail come down today, and we could talk about that in another video. But just to stick with this, I like this trade a lot, and this is the one that I would be focused on more than crowd right now. Like this is telling you it's going to push first. It's telling you that. It's telling you a story. So keep that in mind. NEW, I just wanted to go through this really quickly. For the person, I'm assuming somebody's in this and holding on with a wing and a prayer and they bought this. You need to sell this. Okay, it's very clear what's going on here. They're spiking it up and they're getting people in and then they're walking it down. They're spiking it up and they're walking it down. So unless you know fundamental news or something, the only reason I have this in here is to tell you that you need to be out of this. NEW. NNDM, look, you're just basing. You're just absolutely basing. There's nothing more to say. Right? I mean, these are curling up and they could go, but we can't get through highs, recent highs, right? 8, we're trying to stay above. We're fighting to stay above $8. And yeah, all these are converging, and I understand that that's important, but they can converge and then they can flatline. So you just need to watch this and see what happens with it. I wouldn't chase this. I wouldn't chase this, and I wouldn't be in this right now. I'd want to see it confirm. And the volume, people are they're just not paying attention to it anymore. PGNY, I like this little wedge and how tight this wedge is getting. I'd like to see it break out and go up to here, 74.84, and I'd like to see that. I'd like to see it make that move. And we'll see. We'll see if it does that or not. I don't know if it's going to or not, but that's what you're waiting for, breaking through that, and then you start looking at these upper channels. The volume just kind of falling off. The people just really aren't paying attention to it right now. So pins I like, and I like what it did today. Now, I would have liked to seen it follow through, but what we did for the first time was get back into the channel. So this gap area. So let's get rid of these indicators. We all know where they are, but you finally got in here. So now tomorrow, if this rejects and we take out the low, you're going to want to be out of this. You're not going to want to stay around in this. And that can happen. Like that's a doji. It can reject, and the doji's on the low end of it. So it definitely can reject. So if you're in this, I would strongly suggest that you honor your stop because it can get worse. You could break this rising wedge, come back down, $63, $64 pretty quickly. So keep that in mind. If you're in this trade, you have to honor. And the way that I trade and invest, I have to honor my stops. I know that. I can always buy it back, but I just have to take the loss and move on. And I can watch it for a week and find another spot to try again. But look at the range. So when I get into this, I think that you're going to see buying. I think you're going to see real buying, and I don't think today's the day. And I think people are concerned about the impending Fed meeting and then the minutes. So keep this in mind. But I like it. I still do. I'm not crazy that I got a doji today. I hate them. So they're uncertain. I don't like uncertainty. We went through this. This is the one you need to be looking at versus Futu. I mean, it is crushing Futu over the past 3 months, right? Stop looking at what was going on and stop thinking that you understand the finances of these companies so much better that you're going to fundamentally analyze one versus the other. Futu went from 12 to 155 or wherever the heck it went to. I think it was even in the 200s, right? Okay, it's got to go through all that again. This one's hitting highs. So why are you, let's focus on where the money's going, not where it's been. And so I would argue that you could be playing this looking at smaller time frames. If I break through this and I take out a higher high, you could see a massive squeeze here. And this volume, the way it's accelerating is telling you that I'm right. So RHE does not look like it is going to go here. Let's just see if this loads in here for a moment and see what the issue is. Maybe we just click on it again. And we're going to load in. Doesn't seem to want to load. Let's try this again. There we go. Okay, good. So RHE, you're just riding this little line down and just watch this. Watch this this line. I don't think this is something that you really have to rush into right here. I don't like how you're rejecting up here and how you have these long wicks. It's just people selling into it and the volume's going away. I think that's why I chose to show this one. If you break this line here, you're heading down to this $10 range. Roku, I mean, it was one that we recommended today in the newsletter on the break at 350. It was very clear why I recommended it, and I'll just walk through that so that we can see it. So let's just do the volume so you can just see exactly what I saw. Okay, so this was the open, and we just ripped. I mean, the volume just went through the roof, and right at the right spot too. So the whole trade just mapped out perfectly. I had extreme volume, and I was right on the crux of where I needed to be to break out, and that's why I was all over it. And you can see it played out perfectly. So I think this has massive potential. On any dips, I would love for it to go back to that level to add to it. I don't know if I'm going to get that opportunity. I know people don't want to hear that are in it, that it could drop 18 points, but I would love if it does. But I think that this could really, really push very, very quickly. You're set up to just get to 400 pretty fast here. It could happen shortly. And the volume curve, the way that you're cutting back through here is telling you that expect another volume spike. When you cut under like this, you're setting up, especially when the trajectory changes so strongly. But you could see us trade to highs. I mean, this never really broke down, right? It never really broke down like some of the other big names did, right? Let's get rid of this, just clean this chart up a little bit now. I mean, it just formed a wedge. Never got below the 200-day, never really fell apart. So I like this name, and I think that this could be around. SPWR. I know why people are looking at these. I would just argue that the volume has just been dropping off of these names for some time. And I just watch them, the solar ETF names. I get it. But, you really need to start breaking some levels. So before I even touch this, 28 3/4. And then you have 10. I love this name. I think that this is going to be a huge winner. And you see how we're just respecting this line, but you have to pay attention to that wick. When you start seeing breakouts like that fail, you need to pay attention. And that just coincides perfectly with this 21 1/4 line. Perfectly with it, right? So you need to pay attention to things like that. So I don't really want a wick there. I like how my volume's coming in. I want it to break and stay above it because I think it's going to go to 26. And I frankly think it's going to 37. So I want to be in this name. It's just not telling me that I can be in it yet. I hope that makes sense. So it's definitely on my radar. TLRY, it's not over. I mean, we're in this one from the newsletter. I think at one point I gave a secondary position at 20, at 19 that you could be out of it. And we broke that. So you're probably out of that. But 1950 stock from the newsletter with the 50-day moving average was our first position on it. And let's just get rid of all this so we can pay attention to what's going on now with it. And we were in this one before and we did very well with it. But like the secondary position just didn't work. We just did nothing but go down the second time we added to it. So there's still a position in there from the newsletter, but this one's just dead. Can't get above the 2020, fell down, and it's riding this wedge line, but it could easily break this and head back down to this level. So, it stays in the newsletter until that happens, until I lose those 2 points. But unless there's something really fundamental that changes. I don't think this is over. I think this is a classic example of we're building a base. And that's what you're doing here. You're going to go up, come back down, build a base, and then you're going to go higher. That's what's going to happen with this. But that doesn't mean that you don't honor your stop. You do, and then you just find another spot to buy it. So TTWO, I love this name. I like what I'm seeing here. The way that the trajectory of this 21-day as it slices through the 50 and the 200 after going through this base and taking out this high, this is exactly what you want to see. 188.34 is your swing. You're going to have trouble with 195.38, but getting through this, I think it happens. I do. I think it happens, and I think it's going to be huge. So keep that one on your radar. UPST, look, I was pretty adamant that you were going to break down today. I would argue that today what happened is probably the worst thing that could have happened for it. Maybe they're going to start filling in this wick, but opening at the low instead of just flushing out, it's not really what you want to see. And then at the end of the day, this is where we close. And this is what's going on. And I want you to understand something. The reason that the closes are so important is because the institutions really buy towards the end of the day, right? So if they're not closing strong, that they're not buying. Who buys in the first hour of every moment? Who buys the first 15 minutes of the day? It's retail. They got to get in. We got to get in now, right? And that's who bought this. And look how that transpired. So retail's in, and in the first 15 minutes, I never got above that bar. I never had one close above that first 15-minute bar. Not one. Not one close above the first 15 minutes. It's pretty clear that you don't have follow-through. So I would actually argue that today could be a trap. Let's look at the hourly, right? So I opened up, and then every bar on the hourly was a lower low. So it felt trappy to me, and that's why I didn't pull the trigger on it. And I would have liked to have just seen a flush. That's it. We're done. Get me out. Instead, I have this nonsense. And, now I have a green bar below the 50-day and below this other bar. That's a really tough read. I'm not going to lie. That's a very tough spot to read. So I don't read it. I just get out of the way. I would be concerned that you people just got trapped in this. And that, later this week, it might present an opportunity where it's weaker. We'll see. And I am looking to be long. So I'm hoping I'm wrong. And it's either going to give me a shot one way or another. It's either going to give me a shot by starting to fill this up, which I'm fine paying up for it, or it's going to break down and give me a shot. But it's on the radar, and we'll go from there. VXRT, I just want to go through this one. We walked through this trade. I thought we walked through this trade on Friday in the short-term top. Look, you have an inside day right here between 968 and 833, and you have this wick, and you just had selling again in this wick, not buying, right? So you have to be aware of that. And I thought I walked through how we did the short-term top on this. When I said it, I'm just going to do it again because it's important. And you can use this pattern, right, for essentially anything. So again, you can use this pattern for any stock on any type of time frame. Let me just walk you through it. So here's your break and your rising wedge, right? And sometimes double digits, like triple digit numbers, are a psychological barrier, as we were discussing earlier. And this 10 was a psychological barrier. So I'm riding this wedge line all the way up. I break, right, at 10, come back down, and you see how you open? Look, I mean, they pulled like the perfect flim-flam. Like they open it higher than this bar. So you're like, oh, it's really going to go. And then it gets jammed down. And then as soon as you open here, they run it up, right? As soon as they do this just pay attention to this part of it. As soon as they open here, okay, and they run you up, and then they take you back through that open and this low, even if you wait for that low, you know you're toast. Like, you know that you have an issue. They're not going to hit this line and then all of a sudden miraculously find buyers. And that was your top. So if you look at this pattern, you start recognizing this type of pattern, breaking a trend line like this, the rising wedge, the frozen rope, the whole 9 yards, and you start understanding this move and what they did here, you can save yourself a lot of money, and you can find short positions if that's part of your repertoire, or you want it to be part of it. So keep that in mind. But what do we do with it now? Let's just get through it. I mean, you have an inside day, and you have to see what it's doing. Look, I don't think that this is over. You're building. And you tried to rally, and you're building. And so I think that you might get another shot at this, but you're wedged in there. So we'll have to see how that plays out. Workhorse, it just didn't work today. And I really thought it. I recommended looking at this at $16, and it just did not work. The ride news and what they said just was the exact opposite of what I thought. I thought that we'd see more people come into these names. Instead, it created more uncertainty with these names, and people are just looking at it and getting involved in them and shorting them. So just keep that in mind. If it hits your stop, you have to get out of it because they can get a lot worse. I mean, they're trading on futures, like really trading on the future. And if these things come in, yeah, they can get worse. Yes, they can go back to $7. There's no reason that it can't go back to $7. It's not like they're making an insane amount of money. I still think that this is setting up for higher prices, but we have to honor a stop. So ZM, recommend this one at 45 3/4. The stop was 43. And, we got up. We're feeling pretty good about ourselves, and then we sold down. This might be selling down on the inflation trade. That will affect pricing, and it could be why we saw weakness. But there's a little pattern here that I want everybody to look at. And we're going to get rid of these indicators because this is a pretty important pattern that you can recognize in other positions. So you have this nasty red bar, which is about as, frankly, and I'm long the stock, but this is about as nasty as you can get, right? Like nobody wants to see that on their chart. So then you form this wedge. And as you form this wedge, what happens? Then you start breaking out and you get to the high here. And that's really what you want to see. So we have to really see what happens here. But the point of this wedge is this. When you have this wedge and you're here, right? I have a failed H pattern or a failed, you can call it whatever you want. But to me, I just see the H with this little wick right here. And I'm not breaking it. So I have a failed H and then I reversed. So technically, you could buy this in this bar and then use these lows as your stop and see if you can trade yourself back to 47. So that's it for the evening. As always, please like this video because it's my goal to get in front of as many people as possible to show them what it takes to be truly successful trading. Thank you very much. Have a great evening.